Just having a look at a chart here that I found on Zero Hedge. They're saying that the JP Morgan Manufacturing Index is this red line here, and the World Market Index is this green line here, and they're saying that the World Market Index is potentially going to come down and catch up to this PMI manufacturing PMI again. So that's going to be something to see. We could be in for a deep dive here, which is according to my analysis as well, with this being a distribution range here. So could break down through this to the downside here as well, maybe just below the, or at least down to this target here. But we don't want to make assumptions yet. We want to see how it goes. But the weekly MACD is still crossed down here, so a lot of people are buying this dip here thinking that's all there is to it, and so it's maybe just short covering. So you don't want to be anticipating where it's going to go from here. But we had a bounce. I said on the weekend, when I did that video on the weekend, I said we could get a bounce off the 4 hour, and that's exactly what happened. And now, so we're just waiting to see what happens now. And that was the short-term template. I said I had my stop right. That was on the weekend, right here when it was on support. So you've got to get ready for a bounce off support here on the Monday. And as soon as the Monday opened, it hit the stop there. So that was, right now it's back above the Kumo. So I'm looking for price to get turned back down below the Kumo again before I decide to get any bearish. Before I start to look at any bearish activity, I'll be looking for it to cross back below my short-term trender here on the short-term template Kumo rather. So that was a good. So see how tight I got on that. See how tight the execution was. It also got stopped out here, and then it just resumed back to the downside again. Never went. So that was off a. So you just, that's how you trade it. If you want to manage it tighter, you go in, take your stop here, and you take your re-entry again to the downside, take your stop out here again. So you're looking at, that could be all there is into it, because the MACD is diverging now, but the 4 hours still got a bit of work to do. So you could have a bit more work to do yet before we get a reversal back to the downside again, but we'll see. The VIX has just pulled back a bit on the daily. The weekly still holding up quite well, and certainly not over yet by a long shot according to the VIX. And the junk bonds also bounced off that 4 hour support there, the key support. But the daily's still down on the junk bonds here, so yeah, you had the with the point of control here. Sometimes I want to show this. Sometimes I want to look at this range here as well as where it broke down, get the volume profile for both. I want to see where the point of control was in this range here, and then when it broke down here, we know we're down to the very faded candles down here, so that's why we're expecting to get a bounce off here, as we did, as we got exactly what we got. And the Kijunsen was flat up here, so we got a flat bounce back up to the flat Kijunsen. Sometimes I like to show the volume profile for here, and I'll show I like to see just the fixed range volume profile. So you can select fixed range volume profile and have both on here. You can have, which I'll do a video about, you can have volume profile for this whole thing. You can have volume profile just from here to here. So you just want to see where it broke that range and down to there. That's the volume profile for there. That was also faded candles just like that. So Nasdaq is. So this was the point of control here. I just want to show where it broke below the Kumo in this case. That was the point of control, this little consolidation here. Well, that point of control here ends up being the resistance on the retrace back up to the price wants to try to get back up to the Kijunsen here, but it's found resistance. It's picked up this point of control here as a resistance, and also picked up the trender here as well as a resistance, the flat trender. So this is all stuff that's interesting to look at. Bounced off the 4 hour support here as I expected. So you can take that as one trade there, one whole down leg there, like that. Or you can also exit here and re-enter here again if you want to manage a bit tighter. So it doesn't really matter what way an exit here, right? For this, here's where you off this support here. You want to exit the trade, or you can enter here, right? And you can have two positions going and close both of them down here. So you've got a bit of flexibility in what way you manage it. Depends on how skilled you are and how you want to go about it. This is SQQ. Remember we had the study SPX and SQQ. Well, they've both closed out now. This is SQQ. That was 20% here, and this is a leveraged one. So leveraged like SPXS is. So these are inverse ones. So that just gives you an idea where you got stopped out there, because you're far from the 100 MA as well, and you've got the inside candle here, which is a dead giveaway, and the flat Kijunsen here, so that's a dead giveaway. You put your stop up here. So if you are just doing this as a practice exercise, you put your stop up here before the market opens, and next day you come back and see if your stop got hit or not. That's all you have to do. It only takes you an hour, half an hour. It shouldn't take any more than half an hour to an hour a day, and that's if you're really slow, but half an hour, it should be plenty of time to go through those 10 watch lists that I said to follow. Dollar index here, this is a double top here on the daily, and it broke down through that ascending channel there. This on the weekly, it's an ascending wedge type of deal. It's testing down here on the weekly down to the weekly Kijunsen here. So that's a point of support there potentially on the dollar index. Been some good trades really in Forex this week. You never know. You've got to do your watch list and keep updating it, because you never know what's gonna happen from one day to the next. So you've got to keep on top of it. Oil futures. This is the futures CL1. This is right touching on the 61.8 Fibonacci retracement at the moment on the daily. The Fibonacci, haven't really talked much about Fibonacci retracement. That's a key level in Fibonacci, 61.8%. And look at the very faded volume here down here. So you'd have to expect to get a bounce off here potentially. You can't short this here because you can't go against the 4 hour MACD. So you're just waiting for there. Waiting to see if you get a bounce off that key level there or not. Bitcoin come back to the Kijunsen, which is nice, and it's also quite a high volume point here. So you can see the point of control was way back here, where we got this high volume consolidation here, and then you broke out and boom, off to the races to the upside. That's what you want to look for. You broke above the Kumo here. That's why I'm showing the whole thing here to see what it's like. You got the faded candles up here. You were running into a thin air pocket up here, and you come back down to this disputed volume area. This picked up this back here. That's what that's showing. So that's an active support on the way back on the retracement again. So these are all. So if you came back and filled up this air pocket down here, which I very much doubt, you'd likely find support back down here somewhere, but I don't believe that's going to happen at this stage. But cryptos follow the exact same rules as anything else. They're exactly the same, no different. The rules are the same. It's the exact same price action. Look at that. That was a double top, classic double top on the 4 hour here, right? Classic double top, tried to retrace, hit the trender, boom, down she went. So I mean, this is just not very complicated what I'm showing. It's very simple, really. I don't know what else to say. If you don't find trading interesting, then and take up. It's not for you. Trading's not for you. If you don't find charts interesting, then do something else. Right, bye.